What's up, everyone? All right, so in today's episode, I'm going to break down all of my trades from the morning. Now, today was kind of an interesting day because we had some good action pre-market and a couple of, sort of typical small cap stocks are squeezing up. And then as we got closer to the opening bell, Kohl's, which is a sort of, it's a 110 million share float stock. It's $12 a share right now. It starts popping up on the scans. Now, typically, easy to borrow, higher float, wouldn't be interested. But this thing ended up going from about $10, $11 a share all the way up to 20 bucks. So what was the catalyst? What was driving the momentum on this? Well, Wall Street bets. This has a 44% short interest. So that means there's about 50 million shares that are short, holding the stock to the short side right now. So each dollar a share, the stock goes up, they're down 50 million bucks. So this went up $10 a share this morning. That's a $500 million loss in aggregate for all of the shorts that are holding a position on this. So if we look at the chart, what you'll see is that this did squeeze, but then it came right back down. And so, you kind of have to take all of these with a little bit of a grain of salt because it's hard to say if anyone really would have covered their position or if they just would have held, and kind of hoped that this would turn back around for them. And obviously it has, but what if it had gone to $25, $30, or $40 a share? At what point do you kind of cut the loss on the short side? Well, if you look at the daily chart, big picture is this is really, yes, it's obviously popped up quite a bit today, but historically it hasn't gone to any unprecedented level. Not yet. Now, maybe it will in the coming days, but I think unless you shorted it basically very close to the lows earlier this year, you'd probably still, if, as a long-term position, be in the green, even in spite of today's short-lived pop. So I started my day with some of the typical small cap stocks that helped me build a cushion. I'm sitting right now up $59,596.16 on the day in the green, down off my high, which was $71,000. So I gave back about $12,000 off the top, which is a little more than 10% of those gains, close to 15%. So that's kind of a good place to call it quits on the day. So let's kind of break down each of the stocks I traded, and we'll finish with Kohl's, since that was one of the last trades that I took. All right, so first trade, IVF. IVF this morning hits our scans and starts popping up right here, as you can see, at about 655. Now, this is a stock that I have traded before, and I said I'm a little cautious on it because it tends to pop up, as you can see on these higher volume days, but then sell off. So I'm really not sure it's going to work, but I will note it's a recent reverse split right here, and these tend to be kind of a setup where we see the reverse split, then we see news, and we get this big short squeeze. So in this case today, it initially pops up to a high of about it was about $4.50 a share. So let's see, it pops up right here to about 368. That was the first pop. Dips down and pushes higher. I did not take that trade there. I was watching it, and I ended up sort of being a little on the fence and not sure it was going to work. And then it, as you could see, ended up working really well. So if I use the 10-second chart here, you'll be able to see that we had this little pullback right around 368 right there. Then it pushes up here to this level, dips down, and I got in right here at 440, and we got this pop up to about 490. It dips back down to 450, 440, then it comes back up to 5. So on those trades right there, those first trades, I made $4,000 and I was like, all right, there you go. You're breaking the ice. You're getting yourself in the green, building a little bit of a cushion on the day. Now, that was 20,000 shares and about 20 cents of profit. So it wasn't a huge win in cents per share, but I had enough shares that the dollar amount was decent. So $4,000 of profit on that first trade. Then it dips back down, as you can see here, sort of sells off pretty sharply, and then it rallies back up, creating an inverted head and shoulders pattern. This is one of the patterns that I teach in our classes because it's a pattern that I like to trade a lot. And so I got back in for the break of the head and shoulders pattern. It pulls back, and then we got another trade up here to 5. Now, it did not end up breaking 5 on this first attempt. It pulls back, and then it breaks it on the second attempt right here and I got a nice trade on that move right there. So in total, and I stopped trading it right there. That was my last trade. So between this move here and right here, I was able to lock up $17,859.84 of profit. You can see my P&L right there. So I got myself in the green. I felt pretty good about that. I took a number of trades on it. It wasn't just one entry, one exit. It was probably six or seven trades. So getting in, getting out, getting in, getting out. But cumulatively, they totaled out to $17,000. So that was a great start to the day. That was IVF right at 7 a.m. Then at 7:02 a.m. So those were all my trades on IVF, which was basically between 7 a.m. and 7:15. But at 7:02, I also got a trade on GVH. So GVH popped up after hours. This is a stock that is also a recent reverse split, as you can see on the chart right there. Squeezes up after hours, sells off, rallies back up right here, sells off, rallies back up again, and sells off. So where did I trade it? Well, coming into 7 a.m., I took a trade on this, buying this curl right down here. And I was looking for the retest of the volume weighted average price. I was hoping we would break that level and break through this resistance area here, which would then kind of give us a room a little bit further up. Now, we did have, you could argue, some kind of resistance in this area. It was not able to go much higher, but on that trade, I made about $5,000, which put me up over $20,000 on the day in the first 15 minutes of trading when you combine IVF and GVH. Now, I got one more trade on GVH after the open. Right here, it halted up, it resumed, it dipped, it ripped up to 1065. I took some profit, and then it drops back down and halts going the other way. So a little choppy there, but nonetheless, sitting on GVH up $7,449.89. So those were the two stocks that got me essentially my cushion on the day, my first profit target, which is $20,000. So I got myself up over 20 grand, and I was like, all right, that's great. Then 725, we get IPDN. So IPDN ends up popping up, as you can see right here. All right, so this one, I did jump in. I made $5,000 on it, and this one I was a little bit cautious about. It hit the scanners. It started to pop up. I jumped in it at 380 on this micro pullback right there on the 10-second chart. It ends up going up to 440. So I jumped in, I jumped out, booked my profit. It ends up coming all the way back down to 3. It drops here. I buy a dip. It bounces back up to about 318, 320. And so I got a little profit on the bounce, but I was disappointed with that move. So that was like, uh-oh. Don't really like the look of that. That's not clean. And then HTOO pops up. Now, this is the stock that I'm actually up the most on, $38,000 in the green. But here's the thing. When it first popped up, I was like, I don't know. I'm feeling a little nervous because I just had that close call on IPDN. So this ends up popping up and goes from 5 to 6 to 7 to 8 to 9. I see it hit 10. I see it dip down. You can see these sort of topping tails. So I'm watching the level 2, and I'm kind of like, should I get in here? Should I not? The volume is still very light, and I'm like, I just don't think I can. So it ends up popping up here, dropping down, and right through here, it bases out. So I bought off of the support level of 12 and took profit up here around $14, $2 a share. It's not bad. That got me some profit on it. Then it pulls back and dips a little bit lower. So I switch off the 10-second chart, and I switch over to the 1-minute chart. Pulls back, pops back up, breaks back over VWAP, dips back down, climbs up again, dips back down, climbs up again. So the way I traded this was when we broke over VWAP right there, I got a little scalp on it here, jumping in, jumping out for a quick profit. It goes sideways here, below VWAP, back above it, bases out and holds, another little dip there, another little dip here. It gets up to this level, pulls back, comes up here, not sure about it, comes up here, kind of not sure about it either, and I take a small trade. It ends up pulling away here to a high of 15, ends up being a red topping tail, drops back down. Then at the open, dips, pops up, almost halts a second time, and then drops down, halts twice going down, now once coming back up. So, this is a stock that was just a little bit tricky, and I was cautious about it we had a day where it popped and reversed back here. You'll see this back on July 15th. Look at this. It pops up and reverses entirely. So I was right to be nervous on it. And, I did the best I could, but I missed a good chunk of the move. So $38,000 of profit on that one. So I'm peaked on the day at 71,000. I'm sitting at about 71,000, and then I gave back $2,000 on HTOO, and I was sitting at 69,000. Then Kohl's comes along, and I see it popping up, and I'm watching it, and I'm like, this thing is just ripping higher, but I don't feel like I can manage my risk on it. On the 10-second chart, I'm watching it through here, and although you can see, I started watching it around $14 a share, so like in this area. So I see it pop up here, topping tail right there, dips down, comes back up, dips down. So I'm like, is this somewhere I should buy? Not sure. Ends up pushing here up to 1580, up to 16. I'm like, gosh darn it. Then up to 17, topping tail, dips down, back up, dips down, and it comes back quite a bit, down to 1560. Then it comes all the way back up here to 19. Dips down, taps 20, dips down, and I took my first trade right here for the break of 20. So what I was doing was a micro pullback right underneath 20. I was looking for the break of 20. It drops down to 1850. It bounces back up here, and I ended up getting out with a $10,000 loss. I then got back in, and it breaks this level here, but immediately comes back down. And so I really didn't make any money on that trade, in spite of having totally the right idea, I guess in the short term, but that was the high of day. And I just said, you know what, I'm just leaving this thing alone. And it ended up selling off basically after that spike. So, coulda, woulda, shoulda, gotten in sooner. I don't know. I ended up losing on it. I got in near the top. I'm okay with the loss for where I was sitting on the day. It's tolerable, but it is a little annoying, to have a stock that goes up that much and still manage to lose on it. But right up here at 20, there were a lot of sellers. And I jumped in, and I could tell pretty much immediately I'd bought from hidden sellers. It was like, whoa, there's a wall here. And then all of a sudden it flushes down, and I'm like, gosh darn it. Comes back up, goes for a second attempt, and jackknifes back down. Comes back up, drops down, comes back up, then drops back down. So it just, the challenge with trying to trade these stocks is that, number one, you have people, if it's a Wall Street bet stock, who are not day trading it, but they're buying to hold it for a couple days, or maybe even weeks or months, hoping for the next GameStop. So when that's the case, they buy large positions, usually as many shares as they can afford at a lower price. And then when it finally gets up to a level where they're like, I'm going to cash out, they'll just sell the whole thing. So you'll periodically get these big sell orders that are dumping shares that they've been holding for potentially a couple of days or longer. So that creates these bursts of selling. And then, of course, you have institutional traders and big money traders who think they know better and are going to be adding to this and, to the short side, thinking it's just going to keep fading. And so all of that creates a bit more, a bit more of a challenge when you're trying to day trade them. So, I actually lost money on the first few days of GameStop. And then when it finally started to really pull away, that's when I made money. But I actually remember the first day trading GameStop, I think I lost like $35,000. And I was, I was like, man, this is unbelievable. I mean, yes, it's up a lot over the last couple days, but the intraday price action was just way too choppy. So anyways, you got one nice squeeze here. And I was watching this little pullback right here. And what talked me out of it was that you had these two topping tails. I was like, that's a tweezer top. It doesn't make sense. I shouldn't buy here. It goes anyways. So then, up here, I'm like, all right, well, it's holding up right under 20. Let's take it. No, of course, then that doesn't work. So anyways, it is what it is. Look, and this is the thing with trading. You're always taking risk. So you just have to understand the risk and the reward relationship. And if you're comfortable taking risk and you think you've got some reward potential that's more than what you're risking, then you should take the trade. And in this case, I probably had the potential to make, $10,000 to $15,000. I don't think it would have been, well, who knows? I guess you don't know, because this is a type of stock that if it really started to squeeze and it went up to $23, $24, $25 a share, next thing you know, it's at 27, 28, and 30. Well, that could have been a six-figure trade. So anyways, it's just, you got to roll with the punches and take the losses and move on. So that's kind of where I'm at. The last thing I want to do is end the day on a losing trade, but on the other hand, the glass is absolutely half full. I mean, it's more than half full. There's no reason to give back the good profit from the morning, over trading lower quality setups. Because I think what ended up happening was we had this huge surge of momentum in the morning, and then everything kind of rolled over. This move sort of just screwed up momentum a little bit, and then some of the other stocks that popped up started to sell off, and now it's just way too choppy. And you're dealing with halt levels. So anyways, that's where I'm going to finish today. And as always, for those of you guys who are tuning in here on YouTube, if you have not already checked out our 2-week trial, 2 weeks for $20, you get to watch over my shoulder. You get access to this software right here, charts, scanners, newsfeed, the chat room, the stream, everything else. I think you'll enjoy it. So make sure you check out the link pinned to the top of the comments and in the description for the 2-week trial. And I'll see you guys back at it. I'll be streaming bright and early tomorrow morning, 7 a.m. Eastern Standard Time. All right, I'll see you then. A reminder as always, trading is risky. My results aren't typical, so please manage your risk, take it slow. I want to remind you that there is no guarantee that you'll find success, whether you learn from me or you trade on your own. So please take it slow.